Good afternoon. Welcome to daily currency update from the currency desk. On Friday, we witnessed some whirlwind movement in the USD INR rate. Earlier in the day, we witnessed sharp appreciation in the value of rupee. This was mainly fueled by the fact that we had better than expected WPI, that is wholesale price index numbers. This inflation data spurred a positivity that again we could expect some rate cut from the RBI on the monetary policy that is due on 18 December. But again later in the day we had some strong dollar buying from the crude oil importers. So this again had caused the rupee to erase all the gains for the day. Largely for this month we could see the rupee trading in the range of 54.30 to 55.20. As we are seeing that traders are holding on to their gains and not willing to take any major risk, due to these reasons we could see largely sideways or range bound markets in the coming days. At current levels, we recommend that if the price is near 55.20 and it comes down, we can very well initiate a short at those levels. Again if we see the price near 54.30, we could again initiate a buy at those levels. So largely range bound trading is expected. In terms of euro, we had weak economic data from Eurozone. This was mainly in terms of the manufacturing and the services output data, which came in not as per expectations, rather it was worse. This is again indicative that the recession in the Eurozone is continuously increasing and is bound to get worse in the future. But yes, as we had a weaker USD, the USD weakness, that is the US dollar weakness, has again weighed in on the Euro USD rate, and we are seeing some strength in the Euro. We could see a rebound in the Euro USD rate from around 1.24 levels. So at current levels in Euro INR, we recommend to hold, not to take any positions, rather book their cover their long positions and enter any short positions only if the rate comes down from lifetime highs of around 72.50. In terms of pound, we are seeing some strength in the GBP. This is mainly because of the weakness in the US dollar, again same as the euro. The US dollar weakness is mainly being fueled by the fact that we had an increase in the size of QE from the Fed. Again, we could see the pound gain in value against the Indian rupee, largely tracking the euro in the intraday movement. So based on the trend, we could trade in the euro and the pound as well. But yes, from positional point of view, we recommend a sell only if the price comes down from lifetime highs of around 89.49 levels. In Japanese economy, on Sunday we saw that the opposition party, that is the LDP party, has won the elections as expected. There are strong expectations that the LDP party would bring in unlimited QE and increase the size of QE by at least tenfold. But right now we are seeing some correction in the USD JPY rate, that is the Japanese yen is appreciating. This is mainly because we have seen a sharp depreciation in the Japanese yen and there is some correction in its value. Again, we have the Bank of Japan policy meeting this week, but Bank of Japan is not expected to immediately increase the size of QE. So we could again see the Japanese yen strengthen against the USD and against the Indian rupee as well. So at current levels, we recommend a buy in the Japanese yen with a strict stop loss. Thank you.